All right, so today we're diving into the luxury car market.
Oh, yeah.
Specifically Aston Martin.
Love it.
You know them for those sleek designs and powerful engines.
Yeah.
But they're making a big move to become fully electric by 2025.
It's ambitious.
It really is. And
Yeah.
we're going to use their 2023 annual report as our roadmap for this deep dive.
Sounds good.
So we're going to break down exactly how they plan to get there.
Right.
We're talking business segments, their financials,
Yeah.
and what they're doing to keep those shareholders happy.
Shareholder value, very important.
Very important.
What's fascinating here is how they're trying to balance that tradition
Right.
with innovation.
Yeah.
You know, they have this legacy
Yeah.
built on roaring V12s.
Those big engines.
Yeah. And now they're trying to convince their customers that electric can be just as exciting
Right.
and just as luxurious.
Yeah, it's a huge gamble.
It is.
But first, let's see what their global reach looks like.
Okay.
So they have a network of 145 dealerships across 53 countries. And get this, even their Tokyo dealership is a top performer.
Interesting.
It's pretty impressive.
It really highlights that global brand appeal, doesn't it?
Yeah, it does.
And, you know, even with that worldwide presence, 83% of their production is still exported from the UK.
Oh, wow.
So that's a significant boost to the UK economy.
Yeah.
Supporting thousands of jobs directly and even more through that supply chain.
So a global brand, but with strong UK roots.
Exactly.
Now let's see where they're selling all these cars.
Okay.
The Americas are their biggest market, with 44 dealerships,
Wow.
moving over 2,000 cars in 2023.
That's a lot of cars.
It is a lot of cars.
And then EMEA, excluding the UK, is close behind with almost 2,000 cars sold
Yeah,
across 54 dealerships.
that's interesting.
So, you know, it's interesting to see how the rest of the world stacks up against those big markets.
Yeah.
Asia Pacific comes in with 1,448 cars sold through 45 dealerships.
Yeah.
And of course, we can't forget the UK, their
Yeah.
home turf, with 20 dealerships selling over 1,100 cars.
So I'm curious about the breakdown by model.
Okay.
Did those sleek sports cars outsell the SUVs?
That's a great question because it reveals a key trend, actually.
Oh. Yeah.
Sport or GT models saw a healthy 14% increase,
Okay.
reaching over 3,500 cars sold,
Right.
while SUV sales actually dipped a little bit by 9%, down to just under 3,000.
Interesting.
So this could point to some challenges in their SUV offerings,
Right.
or maybe it reflects like a broader shift in the market, you know?
Yeah, it's definitely something to watch, especially as they transition to electric.
It is.
But there's one bright spot.
Okay.
Their specials category.
Oh, yeah.
Those are your limited editions.
All right.
Highly personalized cars.
Yeah.
And they saw a massive 70% jump in sales,
Wow, 70%.
which is huge.
That's a smart move on their part.
I think so too.
It plays to their strengths, right handcrafted luxury,
Yeah.
exclusivity, which commands a premium price,
Of course.
and attracts a very specific,
Right.
deep-pocketed clientele.
Yeah.
So this strategy could be crucial as they venture into that electric vehicle market.
Yeah, for sure.
Now, how is all this translating into cold, hard cash?
Right. Let's get into the financials.
Yes, let's look at those financial highlights.
All right.
So revenue's making a statement, up 18% in 2023,
Wow.
reaching 1.6 billion pounds.
That's big.
Big numbers. And this growth is fueled by two major factors.
Okay.
Strong growth in their average selling price,
Okay.
which hit a record high of 231,000 pounds,
Wow.
and higher wholesale volumes as well.
So they're not just selling more cars, they're selling them at higher prices.
Exactly.
That's a good sign for profitability.
It is. And speaking of profitability, gross profit surged
Oh, wow.
by a whopping 42%,
Huge.
reaching 639 million pounds in 2023,
Okay.
which translates to a gross margin of 39%.
Yeah.
A significant expansion from the previous year. And what's even more interesting,
All right.
they're aiming for a 40% gross margin in 2024.
So they're going for it.
They're aiming high.
Okay. So the revenue and gross profit are looking good. Yeah. But what about the bottom line?
Right.
What's their adjusted EBITDA telling us?
Their adjusted EBITDA for 2023 landed at 305.9 million pounds,
Okay.
which is a significant jump from the 190.2 million they saw in 2022.
So that's good.
It translates to an adjusted EBITDA margin of 18.7%,
Okay.
which indicates that their strategy of focusing on those higher priced,
Yeah.
lower volume vehicles
They're right.
is yielding positive results in terms of profitability.
That's great.
Yeah, healthy numbers.
Very healthy.
But let's move beyond just profit.
Right.
Let's talk about what really matters to investors.
Exactly.
Shareholder value.
Yeah. Did Aston Martin pay any dividends in 2023?
They did not pay any dividends in 2023.
Okay.
However, they did introduce a new initiative
Oh.
called the Sharing Success Employee Share Plan.
Okay.
This plan awarded 425 free shares
Wow.
to over 2,500 employees,
Right.
which is a really clever way, I think, to align those employee and shareholder interests.
Yeah, it makes sense.
It's like fostering a sense of ownership within the company.
It's a win-win.
It is a win-win.
But they were also active in buyback activities, right?
Yes, they were.
What can you tell us about that?
While the report doesn't specify the exact amount spent on buybacks,
Okay.
it does direct us to note 27
Okay.
of the financial statements for those details.
All right, so if anyone wants to dig in a little deeper, they can check out note 27.
Exactly.
So they're investing in their people,
Yeah.
buying back shares,
Yeah.
but are they actually generating enough cash to fund these initiatives?
Right.
And more importantly, invest in that ambitious electric future?
That's the million-dollar question, isn't it?
Yeah, it is.
And to answer that, we need to look at their cash flow statement.
Okay, let's do it. Lead the way.
All right.
What are the key takeaways from their cash flow statement?
Well, their cash flow statement reveals some interesting insights.
Okay.
While their operating cash flow was positive, they did have a significant outflow from investing activities, primarily due to their capital expenditures, or CapEx, which is basically the money they're pouring into things like
Right.
property, plant, and equipment,
Yeah.
essential for growth.
So they're spending big to expand and modernize.
Yeah.
But does that mean they're burning through cash?
Well, that's where it gets interesting.
Okay.
They're actually aiming to be sustainably free cash flow positive from the second half of 2024.
So that's a pretty crucial target for them,
It is.
because it means they'll be generating enough cash to fund their operations,
Right.
invest in growth,
Yeah.
and potentially even reward shareholders.
Exactly.
So free cash flow positive is the magic phrase investors will be listening for.
Definitely.
But let's zoom back out to those business segments for a moment.
Okay.
We talked about that dip in SUV sales.
Yeah?
But what about the challenge of convincing their traditional customers to go electric?
Right.
How are they approaching that?
It's a delicate balancing act. They can't alienate those loyal customers who crave that classic Aston Martin roar.
Right.
But they also need to attract new,
Mhm.
environmentally conscious buyers.
Makes sense.
So their racing green strategy plays a key role, I think, in bridging that gap.
Okay, so it's more than just slapping a battery in their cars.
Yeah.
What's the strategy all about?
Well, it's about weaving sustainability into the very fabric of the Aston Martin brand.
Okay.
So they're talking about minimizing their environmental impact throughout their operations,
Right.
using more sustainable materials,
Okay.
even boosting biodiversity around their facilities.
Wow.
Yeah. They're also aiming to achieve net zero emissions
Oh.
across their entire supply chain by 2039.
So it's a comprehensive approach,
It is.
which is impressive.
Yeah.
But, I want to go back to their sales performance for a second.
Okay.
I noticed that EMEA, excluding the UK,
Right.
saw a huge 32% jump in wholesale volume.
Yeah.
That's a big win, right?
Yeah, absolutely. That strong growth in EMEA indicates that they're successfully diversifying their revenue streams geographically.
Yeah.
So while the Americas remain their largest market,
Right.
expanding their presence in other regions is crucial
Yeah.
for long-term growth and stability.
Makes sense. But then you look at Asia Pacific,
Yeah,
and they actually experienced a 20% decline in wholesale volume.
right.
What's the story there?
Well, that decline warrants further investigation, I think.
Okay.
It could be due to a number of factors,
Yeah.
from economic conditions in specific countries
Yeah.
to shifts in consumer preferences.
Right.
It's also important to consider the competitive landscape.
Oh, yeah, of course.
Are other luxury car makers gaining ground in that region?
Right. Are they facing stiffer competition?
Potentially. Yeah.
That's a good point.
Yeah.
It just goes to show that you can't just look at the overall numbers.
Right.
You have to break things down by region,
Yeah.
by model, by category, like those specials that are performing so well.
Exactly. Those details reveal the nuances of a business's performance.
Yeah.
And they can provide clues about their future trajectory.
Oh, for sure.
That 70% surge in specials, for instance,
Yeah.
tells us they're successfully capitalizing on their reputation
Yeah.
for bespoke craftsmanship.
For sure.
Imagine an electric Aston Martin with hand-stitched vegan leather
Wow.
and personalized digital dashboards.
Oh, yeah.
It's a compelling proposition.
It really is.
But let's talk about shareholder value again.
Okay.
We know they didn't pay dividends in 2023.
Right.
But they did buy back some shares.
Yeah.
What's the overall takeaway from their approach to rewarding investors?
Well, their focus seems to be on long-term growth
Okay.
and achieving sustainable profitability.
Okay.
So their belief is that by hitting those ambitious targets, they'll create value for shareholders over time.
So it's a classic growth story. Invest now for a bigger payoff later.
Exactly.
But of course, there are always risks involved.
Right.
And we've touched on a few of those.
How do they view the risk of technological advancement?
Well, it's both a risk and an opportunity
Okay.
if they successfully embrace new technologies,
Right.
particularly in the electric vehicle space.
Yeah.
They could leapfrog their competitors
Right.
and attract a whole new generation of buyers.
For sure.
But falling behind could be disastrous.
That's a great point.
Mm.
The very things that could threaten them
Yeah,
could also be their path to success.
absolutely.
But what about the risk to their brand and reputation?
Oh, yeah, that's a big one.
That's huge for a luxury brand like Aston Martin.
Absolutely. Their reputation is built on heritage,
Right.
exclusivity,
Yeah.
and performance.
Of course.
If their electric vehicles are perceived as anything less than exceptional,
Yeah.
it could really tarnish the brand.
Right.
So they need to ensure those electric offerings are not just technologically advanced,
Right.
but also emotionally resonant,
I like that.
capturing the essence of what makes an Aston Martin special.
So it's not just about specs and features.
Right.
It's about storytelling and perception.
It is.
So how do they plan to bring that emotional resonance to their electric vehicles?
It's all about weaving a compelling narrative
Right.
that seamlessly integrates electric vehicles
Right.
into the Aston Martin story.
Okay.
They need to highlight the performance aspects,
Right.
you know, the incredible acceleration and
Yeah.
torque that electric cars are known for.
It aligns perfectly with their high-performance heritage.
It does.
But they also need to maintain that sense of luxury and exclusivity, right?
Precisely. They'll need to emphasize the craftsmanship,
Yeah.
the bespoke details,
Uh-huh.
the personalized experience.
Right.
Think handcrafted interiors using sustainable,
Yeah.
luxurious materials.
Yeah.
And cutting-edge technology seamlessly integrated into a design that whispers Aston Martin.
It's a delicate balancing act.
It is.
Appealing to those eco-conscious buyers
Right.
without alienating their loyal fan base
Mm.
who are used to a certain level of extravagance.
Exactly. And that's what makes this deep dive so fascinating. Yeah.
We're seeing an iconic brand at a crossroads,
Yeah.
striving to reconcile its storied past with a sustainable
Right.
and hopefully electrifying future.
They're certainly facing a challenging road ahead,
They are.
but based on this deep dive into their annual report,
Yeah.
they seem to be laying the groundwork for a bold and exciting future.
Yeah. They're definitely making bold moves,
Mm-hmm.
but it's clear they're not being reckless.
Right.
Their annual report reveals a pretty thorough approach to risk management,
Okay.
which is critical in a rapidly evolving industry like automotive.
Great. Let's unpack that a bit.
Okay.
We've talked about those big picture risks.
Yeah.
But what are some of the nitty-gritty operational challenges we're
Right.
trying to tackle?
Well, one key challenge they highlight is supply chain instability,
Oh, yeah.
which is a major concern in today's globalized economy.
Right.
So they're actively working to develop strong relationships
Plus-
with their suppliers,
Right.
implementing rigorous performance metrics.
And even conducting due diligence
Okay.
to ensure their suppliers are financially sound.
So it's all about building a resilient supply chain
Yes,
and minimizing potential disruptions.
exactly.
Another challenge they're facing is managing costs,
Yeah,
especially with inflationary pressures
right.
on everything from raw materials and energy to labor.
Mm,
They're walking a tightrope,
they are.
maintaining those incredibly high-quality standards,
Right.
which comes at a price,
Yeah.
while also keeping their costs in check.
It's like balancing luxury with efficiency.
It is.
No easy feat.
But speaking of efficiency,
Yeah.
I noticed they mention a new ERP system in their financial review.
Ah, yes.
What's the significance of that?
That new enterprise resource planning system.
Oh.
It's a big undertaking.
Yeah, okay.
Implementing a new ERP system can be complex and costly.
Right.
But if they get it right,
Yeah.
it can streamline operations,
Okay.
improve data visibility,
Okay.
and ultimately make the business more agile.
So it's a short-term pain for a long-term gain.
Exactly.
But they also acknowledge that there are risks if the implementation gets delayed.
True. They're very aware that any hiccups in that project could disrupt their production and engineering activities, which would then impact their ability to meet those ambitious targets.
It's a good reminder that even with the best laid plans, things can go wrong.
Indeed, and that's precisely why effective risk management is so crucial.
Yeah.
It's not about eliminating risk altogether. It's about identifying potential problems, assessing their likelihood and impact, and then developing strategies to mitigate those risks.
So always have a plan B, maybe even a plan C.
Exactly. And Aston Martin seems to be taking a proactive approach. They specifically mentioned the risk of cyber attacks, which are a growing concern for any business that relies heavily on technology.
Of course.
So they're investing in cybersecurity measures to protect their systems and data. And they're making sure they have robust backup and recovery plans in place.
It's like building a digital fortress around their intellectual property and operations.
Yes, and that attention to detail extends to their physical assets as well. They're working to reduce their carbon footprint, improve energy efficiency at their manufacturing facilities, and even exploring the use of more sustainable materials in their vehicles.
So it's a comprehensive approach to risk management.
It is.
Covering everything from supply chain disruptions and cyber threats to environmental sustainability.
Precisely. And that's a positive sign.
Yeah.
It shows they're not just focused on building shiny new cars. They're thinking about the long-term health and resilience of the business.
Which ultimately benefits their shareholders.
Absolutely.
A well-managed company is more likely to deliver sustainable growth and create value over time.
And that's why this deep dive into their annual report has been so enlightening. It's given us a glimpse into their strategy, their challenges, their commitment to navigating a rapidly changing industry.
It's been a fascinating journey for sure.
It has.
We've gone from the roar of a V12 engine to the hum of electric motors. From hand-stitched leather to sustainable materials.
It's a new era.
It really is.
It's clear that Aston Martin is at a pivotal moment.
It is.
And their success hinges on their ability to blend their heritage with a vision for the future. It's a delicate balance.
It is.
But they seem to be approaching it with a combination of boldness and prudence.
Yeah, they're making big bets. Yeah.
But they're also doing their homework and trying to anticipate potential pitfalls.
So the big question remains. Can Aston Martin truly become a leader in the electric luxury car market? While preserving the soul of this iconic brand.
That is the billion-dollar question, isn't it?
It is.
And the answer will unfold over the next few years. But one thing is for sure.
What's that?
It will be a fascinating journey to watch.
Absolutely. And on that note, we'll leave you to ponder that very question. We encourage you to explore the full Aston Martin Lagonda annual report.
Great idea.
For a more in-depth understanding of their plans and ambitions.
Lots more detail in there.
Yeah, lots to dig into.
A lot to unpack.
Until next time, happy deep diving.